So why is the stock market selling off? What's going on, team? It's Ricky with Tactical Solutions. Hope that you guys are all having an amazing Monday. We did very well today. For those that are unaware, I was shorting the NASDAQ market with a triple leverage ETF SQQQ up 30,800 on the day. I also shorted BBBY. This was with a $10,000 position and I made $1,000. So a 10% return, a little bit over 10% on, $10,000. Very happy about it. I played it very safe. I reduced my position size and then completely closed out of it when we broke below the moving average. A lot of you guys know, if you've been watching me for some time, my main focus every single day is anytime during uncertainty, right? Especially when shorting. I like to play it safe. I lock in profits early. I don't like to overcomplicate it, as markets tend to be more bullish than they are bearish. So I walked away. I made $31,000, almost $32,000 on the day, and I'm very grateful for it. But I want to answer the question that a lot of people are asking is, well, one of the main conversations that I had today, and this was actually with Pascal, which is one of our staycation giveaway winners. He's a big trader out there in Germany, and he was shorting the NASDAQ market, and he intends to short it almost for the rest of the month, right? He thinks that the market's going to continue to sell off, but let me explain to you why. Leading up to September, one of the things that we did not experience in the month of August is any form of interest rate hike. This is something that some of you guys, or most of you, I hope, were aware of. They skipped the interest rate hike on August, and they're going to go back to schedule with the CPI data report and the inflation hike or interest rate hike in September. One of the comments that was actually made last month by Jerome Powell comes down to how aggressive they still need to tighten. And anytime, just a very quick example, anytime that the Federal Reserve prints money, markets go up, right? Because when you're printing money, it's more likely that people are going to spend it, and this would act as a direct proportion that it would go back into the hands of business owners and companies within itself, right? So it goes back into our economy. When more money is printed, this makes markets go up. But just like anything, when you print too much, obviously inflation happens, and that's what we're experiencing today. Now, the Federal Reserve announced that it's going to tighten, meaning that it's going to reduce and or cut back the money that they actually put into the market. This is where they're trying to fight inflation, right? By tightening and actually taking money away, this would be doing the exact opposite of what they did 2020, right? Do you guys remember when the Federal Reserve announced these stimulus checks? The market went crazy, right? We saw a huge run up, I think 16 to 20%. Now, as they begin to tighten, and based off of Jerome Powell's speech, one of the things that he talked about is making sure everyone was aware that they're going to start to tighten much more aggressively in the month of September and so on, right? And this can happen for the next 1 to 2 years. So with that being said, if they continue to tighten month over month, this means that less money is being injected into the market. So it's going to most likely have the opposite effect of what it had when the Federal Reserve was printing money. This is why a lot of people are in fear of a recession. They think that things can get worse before they get better. But let me share my thoughts with you. Regardless of how Jerome Powell and the Federal Reserve intend to raise interest rates, this is a big concern for a lot of people for next month, right? We have that CPI data report that should be released within the first week to 2 weeks of next month in September. So that will show us first if CPI and or core CPI actually peaked in the month of July, right? After that is reported, we will then have a better understanding if the Federal Reserve will have to take a more aggressive approach. If we see that inflation has not peaked and we actually see inflation rise a month again, then it would make sense for the Federal Reserve to go back to 0.75% and or a full percentage point when it comes down to their interest rate hike. Based off of current expectation, they are at a 0.5 basis points because of the data that we received from this month's CPI data report showing that inflation did peak in the month of July. Now, what I take from that is the Federal Reserve is most likely going to slow down in the rate that they are raising interest rates moving forward. They wanted to tackle it on head on, right? So they wanted to front load interest rate hikes. And yeah, some months might have been more aggressive than others, but they wanted to see inflation actually react and come down. Now, if this does happen, I can see them take a less aggressive approach with raising interest rates. The biggest concern that people continue to have are two things. As they tighten their budget, especially in September and the months that follow, this could have a huge negative pressure to the overall market. And second, if you guys heard anything about last quarterly earnings, and as companies still report quarterly earnings, one of the biggest things is huge companies such as Apple, Amazon, huge corporations were not only laying off people, but they also had very poor expectations for up and coming quarters due to the uncertainty of macroeconomics and or just really the idea of there being a potential recession. That is where the concern is at. So what is there to do? Because that's a lot of information to take in, right? Is the Federal Reserve going to raise interest rates or no? Did inflation peak or no? Are they going to actually tighten as aggressive as they said or no? With all that said and done, do we expect the market to pull back a little bit further? Yeah, of course, right? I mean, that shouldn't scare you. If you're someone that's an actual investor and your intention is to invest long term, just like we've said in all of our previous videos, embrace it. Allow the market to sell off. Because guess what? If the market sells off, this means that I only get to add more to my position in Tesla, in my position in Amazon, in my position in Apple. Where are my deal hunters at, right? Is the whole point of us not investing in the market to invest during uncertain times, so while everyone else is selling, we choose to buy effectively what we can tolerate, and then when the market recovers, as it always tends to do, then that's when we make our money. So you shouldn't be in fear of there being a recession. Just prepare. Just have money set aside that even if things do go south, you can at least welcome it with open arms. Now, if the market doesn't sell off, then guess what? Who cares, right? At that point, you can add more if we end up actually retesting and making new highs. But one of the biggest things that I'm looking at is Pascal and myself were quickly talking about QQQ, which is the NASDAQ ETF, and trying to have a better understanding if we were going to see more selling pressure this week. Today, we did sell off a little bit more than expected for the overall NASDAQ market. I think it had about an 8% red day for TQQQ, which is the triple leverage ETF. And it also sold off on Friday as well. So don't forget about that, right? So 2 significant red days for the overall NASDAQ market. So one thing that we tend to experience, and Pascal made sure that I was aware of this, is that not only is there a common support level based off of previous patterns, but he calls it a turnaround Tuesday because of so much selling pressure that followed on Friday and Monday. That Tuesdays, because the markets have sold off so much, it provides a dip buy opportunity for long-term investors or even for short-term swing traders, right? That's maybe why we saw some more buying pressure after market hours and going into pre-market tomorrow. That will give us a better understanding if the market's actually going to recover for maybe 1 or 2 days, right? But ultimately, I need you to understand where the concern is at, and that's if inflation has actually peaked. We will report that in the month of September. We will see how aggressive the Federal Reserve takes when it comes down to raising interest rates. And then lastly, and again, please do take some time to learn a little bit more about it. And it's the overall tightening that the Federal Reserve said that they're going to really step on the gas in the months of September and so forth, right? So it's really important to understand that, because if you are unaware about this tightening and what it actually means and how the market reacts, I think you're going to be quite surprised of the negative influence that it can have to the overall market as they begin to take away money that they actually originally put into the market. It's very simple to understand. They injected money into the market when they came out with these stimulus checks. The market went up, right? Now as they begin to take it back, it makes sense on why the market can correct itself. Again, not really embracing growth, right? You're really trying to tighten the overall budget, reduce spending, and therefore that's where they hope that they can have somewhat of a controlled recession, right? To not put us too bad in of a position, especially with the strong employment report that we've been experiencing month over month. So I'm very excited to follow up. We'll talk a little bit more about this during our live trading session tomorrow at Market Open. If you want to join my live session, make sure you click the second link down below, learn a little bit more about our Learn Plan Profit Group, and see if it's a good fit for you. I hope that it earned your thumbs up. Please consider subscribing if you have any questions about what we talked about today. First link in the description is my Discord. Send me a direct message or feel free to message me via Instagram, and that's that third link down below. I appreciate you guys' time. Like always, let's make sure that we end the year on a green note. Take it easy, team.